Hey there YouTube, it's Steve here and I'm doing a video a little bit early today. It's right about the market close at 4 p.m. Eastern Standard Time. So I wanted to get out a video because we have had quite the day trading today, as you can see on my chart right now. So when we started off the day, we actually had rallied quite a bit off of the low from last night, starting at 6 p.m. We came up starting at a low of 45.14, which was right about where we had closed the previous day, and came up all the way up to just under 4,600. So if you were long overnight, um, up until the market opened this morning, then you were in pretty good condition. We had some pretty big wide swings on the S&P today, which was ridiculously easy to trade, to be honest. Like, you could just use some indicators and you would have not come out any worse for wear, as long as you were being disciplined with your entries and exits. Uh, the my stochastics it's not really designed for day trading the S&P, but my modified MACD would have done fantastically on this actually. At about 840, we is the last entry before the like right before the market open, and that would have been 45.46, and then it would have gone short at 45.81. Not a bad gain, about 35 points roughly. I hope my math isn't that bad here. And then that short signal would have followed us all the way down into 44, the 70s now. Um, Yesterday I mentioned how my because when I did the video yesterday, we were sitting at just about I want to say 45.10, was it, somewhere thereabouts, after it had risen a little bit after the market opened back up. Yeah, in this territory. Um, okay, yeah, 45.16, and I had mentioned that my line in the sand was 4,500, and that as soon as that fell out, then the entire floor was going to fall out. And that is exactly what has happened. Although um, we had a very, very pronounced fall today, and I didn't see any news articles or anything like that, even during some of the volume spikes. Tradeovate has a news feed on the right hand side, but it's global. It's not that fast. It's linked up to things like Reuters and the Dow Jones website and all that. I didn't see anything, but I wasn't exactly paying attention either. Um, we had a lot of very, very high volume nodes here all throughout the day, and I was trading in between those and scalping and all that. I had a fantastic trading day today. Not as fantastic as if I had actually just kind of let my position go and just stayed short the whole time, because I was scalping in and out, like taking 5, 6 points here and there. My biggest trade today was, I want to say, 21 points at one point. So that wasn't too bad. I think I'm up just short of around 40 points, which, when you're trading, is not bad. But from peak to trough here, and we are still going, um, that is 130 points. That is nothing to sneeze at. So when I say, yeah, I was just under 40, that's not bad. However, the overall market movement here, if I had just kind of let it go, um, and we'll get into this in a minute when I go over the S&P swing position that we're in. If I just let it go, then I'd be up quite a ways today. That would have just made my day. However, I've been actively trading all day, dealing with my day trader psychology and all that. I had fear of missing out a few times on the way down here. This is probably one of the more painful points, when I was short and then it rebounded and I was like, nope, I'm gonna hold because I have a resistance level somewhere up here. I was using the VWAP to figure that one out. But yeah, no, one of my psychological crutches whenever I'm wrong in the short term is I'll be like, nope, it still hasn't hit my stop. I'm gonna hold and see how this goes because everything is telling me that it's just a temporary paper loss for me. And I'm gonna take a look at Tradeovate real quick. How did I do today? I had an 80% win rate. Yeah, my largest win was just over 21 points. My largest loss at one point this morning was 6.5 points, so not nearly as bad. And I made a total of 20 points, 16 winners, 4 losers. Um, so not bad overall. Anyway, back on the main chart here. How far is this going to fall? I don't know. We're in the after hours. Netflix is doing earnings today. At least that's what I was told. I haven't really been paying attention to the earnings stuff because I mostly trade intraday. But anyway, yeah, no, it's been a crazy day, and it doesn't look like it's done falling quite yet. Very disappointing because I'm currently on my main day trading account. I'm currently entirely cash. If I wasn't cash, I wouldn't be making this video right now. I'd be looking at my chart obsessively. So, moving back to the swing side of things, because that is what this account is for, but I wanted to go over all of this stuff, and it continues to fall. Anyway, like I was saying, we rallied up pretty hard. There's a reason why our short position here is a little bit different from how it was yesterday. That is because on the 8-hour chart at around 10 a.m. this morning, I went long because we had a crossover. And this is one of the reasons why you only want to make trades if you're doing it based off of indicators like this. You do it on the bar after the actual event happens, because otherwise you can be like, oh, you know, I'm going up a few points and this is a good decision, but then all of a sudden something over on the daily happens, swings hard in the opposite direction, and you never really know how far it's going to go. It's all about increasing the probability of success and everything. So anyway, I ended up during the day, because I swapped between this and Trade to keep an eye on a bunch of different things at once. Once we took out this whole level right here, where we had the close of yesterday and the open of today at 6 p.m. last night, I chose that as my re-entry into a short position. Clearly that was a good move. By the time that I had swapped this, I think that we were in the negative by about a little bit over where we have gained back. So we're just about to break even after another couple of points, maybe another 20 points, or 10 rather, sorry. But in any case, we're going to keep this short, and it looks like it's going to be short for quite a ways longer. How much longer? Don't know. Today's Thursday, isn't it? Yeah, today's Thursday, so tomorrow, I don't know of any economic events. Pulling out my calendar real quick. Tomorrow's the 21st. At 10 a.m. we have the leading economic index. Off the top of my head, don't know what that is. It's not really important right now. But moving on to this whole project, let's see how we have done today. Once again, gold kicking me in the balls. That is just kind of what it does. So, you know, we went long after that huge rally yesterday. Indicators still saying hold bullish, so we're going to hold bullish. Probably going to keep losing money on this. I don't think we've made money on gold a single time in the last almost 2 months that I've been doing this. I know a couple of guys that are really good at trading gold. I know more people that are bad at trading gold, and I am one of them. Gonna be honest, I don't like gold. It's just not my thing. So moving on. I'm gonna scroll this up just a little bit so we can see more positions at once. So I mentioned yesterday about how our indicators were saying go short. However, we're not going to do that. Again, we came right up to this resistance level that I have marked and have had marked for several months now. This was the right decision to make, to hold on, like I was saying yesterday, because we had gone down below and then we're kind of wishy-washy about that support level, then came up and closed above. We have closed up again. At this point, I'm thinking that there's a good shot of it continuing to rally. You know, I like to be wishy-washy about whichever one of my indicators I'm going with at any one time, but I like having justification for why I'm doing things. In this case, we do have one heavily modified MACD saying it's still bullish, although this one's kind of slow in a lot of cases with a lot of the trades, so I use it for different things. However, our justification on this one was support level right here at about just over 4.40. So we are going to stay long on that for now. Again, even though it says that we should have gone short right at the bottom of this pit, which is exactly why you never want to only rely on indicators. They are a tool. Do not use them as a crutch. You will probably lose money over the long run. I have lost enough money in my time experimenting with trading to be living proof of that. Moving on to oil, we have come down by a little bit, which was to be expected by I called it a shooting star yesterday, but I don't remember exactly what you would call that candle. It's like a really, really wide doji, but dojis are usually like really, really small, close together. But it closed right about where it opened. This kind of fall was kind of expected after hitting all-time highs. That's just kind of how it goes sometimes. Like I was saying before, with demand and all that and inflation, I wouldn't have been surprised if it had kept going. However, because I was seeing a lot of headlines being like, oh, it's on the way to $90 a barrel. Well, analysts like to make all kinds of predictions. I don't trust analysts any farther than I can throw them, and I can't throw many of them very far. So, we are going to keep our long position for now, even though we have a cross under on the daily chart. It's still in breakout territory. We are still at a fairly solid level of support. If tomorrow is red, we're probably going to go short. I've certainly been waiting to go short on my main account because oil is one of the things that I'm actually fairly competent at trading most of the time. My stochastics here has just been a fantastic tool for catching most of the really big moves and only having a couple of small losses. So I enjoy using it. Looking over here on the side, the S&P looks to have found some footing at 4470. So we'll see how that goes tomorrow. My alarm's usually set for around 5 a.m. when I sleep at all. Actually, last night was the first time that I slept in like 4 days. So, fun times for me. I slept like 10 hours. So I got up at like a little bit after 10 a.m. this morning. So I missed some of the early morning trading action on the S&P. Not that I really remember what exactly that looked like. It rallied from the overnight, so I would have been long for most of it, but it's still pretty choppy around the open, just like yesterday was. Although not quite as severe, it mostly was playing ping pong between the two of the VWAP deviations. Moving on to natural gas. So it turns out going short was a good decision. Plus the news that I was talking about yesterday with Texas saying that they were going to be fine with the cold snap. The market seems to have taken this to heart. Don't really have anything else to say. We're kind of like in the middle of this little base area, which if you look back is still like a pretty solid foundation here. I like trading natural gas. It's fun, it makes big moves, and it's fairly easy to catch big trends without giving yourself a heart attack, as long as you have the pockets and the cojones to stay into a trade when you have conviction. I like one of the phrases, I think it was Peter Brandt that said it, but I can't remember off the top of my head. It was one of the guys in one of the Market Wizards books. He said, strong opinions, weakly held. Like, you go into a trade because you have conviction, but as soon as you find out you're wrong, you get out of it. And I think that's a really, really good thing to take to heart. Because if you wipe out your account, you can't trade anymore. So, if you're wrong, then you're wrong. Figure it out. Like with the S&P, when I was taking one of my trades and it immediately rallied like 7 or 8 points against me over the course of a couple seconds during the extremely volatile section right after it broke down under 4,500. I kept just chanting to myself that, nope, it's a dead cat bounce. Even a cat will bounce if it falls from high enough, and it had fallen pretty far at that point. Alright, moving on to the Treasuries. Not a whole lot happened since yesterday. We came up and it looks like we gapped down and then came back up. It had a weird display yesterday as well. My indicators are still saying to stay short. However, we do have a cross here, so if we are bullish over the end of the week, then we may enter a position just before the close tomorrow. But for now, I'm quite happy with how the bonds have performed for me. All this talk of having to raise interest rates, I mentioned yesterday, I think it was Optimus Futures, who was saying that it's, in order to control inflation, they're probably going to have to do 3 to 6%, which I really, really hope that they do that over a very staggered period of time. Interest rates certainly should have been higher much sooner than they actually started raising them. Cheap money has led us to this situation that we're in right now, and I'm not a professional economist. I've taken a few economics courses in university, but I like to read a lot about history, and the current situation reminds me a lot about how the Fed was handling things just before the Great Depression. Good book to read on the subject, Lords of Finance. I read that and I learned a lot about it. It's about the central banks of the U.S., and then over in London, France, and Germany over the course of about 4 decades between 1900 and 1940-ish. And one of the things that I learned was that the head of the Fed was buddies with the head of the Central Bank of England. And one of the things that he was trying to do, because they were buddies, was he was trying to influence U.S. monetary policy to help Britain get back on the gold standard. And it helped the U.S. form a bubble in the stock market. And by the time he found out that it was turning into a bubble, it was kind of too late. And not only that, but he raised interest rates far too quickly. I think he raised it by like 4 or 5% at once. I would have to go back and look it up. But basically, that's what caused the bubble to pop. Not that it wouldn't have popped on its own, with considering how inflated it was. It's just something to keep in mind. So we are certainly looking at some interesting times, and I hope you are all able to profit as I do on this. Moving on to the 10-year, probably more of the same, almost identical. We're only about $300 off where we were yesterday, so it's really not that bad. We're going to keep short here as well. Same thing on the oscillator. Crossed over, however, still below 20, so we're going to stay right where we are. Silver, holy crap, silver has done really well. We had kind of a double bottom down here, and I really got nothing to say. Silver has been doing so much better for me than gold has, and always does. I can day trade gold somewhat, can't really day trade silver very well, but swing trading, I suck at swing trading gold. I'm pretty competent at swing trading silver. I like this. I wish this was a real account because I would like to have an extra $9,800. That would be nice. Oh, it looks like the S&P is continuing to fall. But we're going to take a look at the Russell now. The Russell is, of course, following suit. Big sell-off. This might be like the one good Russell trade we've had so far. Really not a fan of trading the Russell. I'm just not very good at it. No, you gotta trade what you're good at, and this is not one of my things. I really don't have a whole lot to say because I've already pretty much covered it from the S&P. But if we scroll back here, we can see that this is exactly where we had a previous all-time high back in 2020 at the very end of the year. And since then, we've been in this very wide, choppy sort of range here. Plus or minus this one breakout. But yeah, I would not want to have been long on the Russell for the last month and a half, give or take. So we're going to take one last look at the S&P and see where this is going. All right, so we are currently just a point and a half, or rather a point now, above the low of the day. Excuse me. How much further is this going to go overnight? I don't know. It's been certainly quite a time. But you can see that as soon as we hit that point, and I made the misfortune of going short like right around here, and this is where I was chanting to myself about that dead cat bounce, and I was like, nope, we have not hit VWAP yet. We're going to keep that right where it is. And then it came back down, and I was able to, I scored like 2 points out of it, and then closed out, and now I'm just like, man, I wish that I had been short through this whole thing. But wishful thinking is not good in trading. What I keep harping upon in each of my videos is a missed trade is not the same as a losing trade. It is disappointing, but psychologically you will recover much more easily. Fear of missing out, also known as FOMO, is an extremely deadly thing for traders. Avoid it at all costs. Use your discipline. Try not to lose money. That is the first rule of trading and the first rule of investing. I believe Warren Buffett said something about that. The first rule of investing is not losing money. That's why he goes by the whole margin of safety thing that Ben Graham came up with. But I'm not 100% sure. But anyway, I'm going to cut this off for now. I will see you guys tomorrow.